on to your seats, we're hitting a patch of turbulence. Is this just some noise in the data, or is this going to have a lasting impact on our outlook going forward? Thank you for joining me for this edition of Numbers Matter Shorts. And by turbulence, I'm talking about the recent data on inflation. Both the CPI for January and the PCE index, the Personal Consumption Expenditures Index, two measures of inflation, both of those came in hotter than we would like them to be. So what does that mean? Is this a start of a trend and inflation is rearing its ugly head again? Or is this just some noise in the data? To be honest, I anticipated this might happen. I think the Fed did too. Looking at the numbers, this is not a huge surprise. It was going to be not realistic to expect that the trend in the inflation data was just going to be a smooth and linear path downward. So we got a little bit of a bump in January that was bigger than expected. So if you take a step back and look at the longer moving averages, say of 3 months, 6 months, 12 months, not a huge blip, not anything that would change my mind about what's happening. And what's happening is the dominant narrative is still a soft landing in the macroeconomic data, indicating that we're going to get down to the range of a sustainable 2%, somewhere in that area that the Fed's targeting, without a significant decline in overall economic activity and a significant decline in the employment data. So at the present time, it takes more than 1 month to make a real trend, and this just a little bit of a bump. If this persists for 2 or 3 months, and I'll be watching these numbers very closely, then I think that does affect the outlook and the risk going forward to the interest rates and the Fed's decision. Right now, it looks like the Fed is aiming for middle of the year for the first rate cut. If these inflation numbers for the next month or two continue to come in hotter than they would like, they may push that back. But right now, soft landing, still the dominant narrative, middle of the year rate cut. So what does that mean going forward for manufacturers, particularly plastics industry? Unlike the overall economy, the plastics industry is in recession, and the manufacturing sector as well. We could use a rate cut sooner rather than later. So at the very least, this means the Fed is on hold. It means that they're going to keep their foot on the brake, keep interest rates at a restrictive level where they are for longer than we would like. We would like them to start, in my opinion, have started cutting already. So plastics industry, manufacturing sector, already in a recession. Some possible good news about that. If you look at, say, the ISM Manufacturing Index, the old purchasing managers, they have this data going back a long time. This is a really good leading indicator for our industry. And it took a discouraging tick downward in February. I'm not going to sugarcoat that. It looked like in January it was starting to aim up, and then in February gave back most of the gain. For the 16th straight month, I think that's right, it's in contractionary reading. Below 50 is their break-even point, and it's below that. The good news, I think, if you take a step back and look at the longer-term trend, conditions are getting worse for manufacturers, but they're getting worse at a slower pace. That's typical of a late contraction, late recession period before it transitions into early expansion where things start to slowly grow. We'll know that that's happening for manufacturers as soon as that line or that reading for purchasing managers ticks up above 50. The plastics industry data is clearly getting worse, but at a slower pace. It's in a recession. It hasn't started to get better. So the interest rates, we're really feeling a pinch. One area that gives me some, okay, I won't say hope, we'll just say a little bit of optimism, is showing up in the housing starts data. If you look at the January number for overall starts, still down compared to a year ago, but declining at a slower pace. Now, all of the decline in January was due to the statistics for multifamily buildings, multifamily dwellings, specifically 5 or more units, apartment complexes, condos, that kind of thing. The important data, the subset of the housing starts data that's important in my opinion, is the single family starts. And there the number got better in January when compared to a year ago. I put a chart on, shows the number of single family starts, clearly in what I would call early recovery. I've graphed the 12-month moving total. The 12-month moving total ending in January is still a little bit below the total from a year ago in January, but the monthly totals are starting to trend upwards, and you can see that on the chart. That's what it looks like to trend from late contraction to early recovery. Now, we still have a long ways to go. The first quarter is usually the weakest quarter for housing starts. We need that all-important second and third quarter to come on. Still headwinds from high interest rates, high mortgage rates. So this recovery is wobbly at best. One other thing, even if that line gets up past the latest peak, and I expect it to do so in the next year or maybe year and a half, 2 years most, that's still an anemic level. This industry still hasn't recovered, but it's a good leading indicator for the plastics industry. The trough in this curve usually occurs or leads the trough in the plastics industry data by a quarter or two. Looks like we have a trough. Maybe we start to get a trough in the plastics data in the next few months, starts to head up into that early recovery period, and then something bigger starts to happen in housing starts, interest rates, and all that. I'm going to be watching this data like a hawk over the next couple of, from now on. I look at this stuff all the time. The next couple of weeks, we're going to get a lot more information on housing starts, the plastics industry, inflation. I'll be back in a couple of weeks and we'll review all that. So right now, hang tight, a little bit of turbulence, but I think we're going to get through it. Thank you again.